Alright, this video is for investors who don't know anything about Japanese candlestick charts, who've seen these candlestick charts and wondered how in the heck do you read these things and why would you want to? So I'm going to just show you the really basics right now, what the white, black, and red candles mean. And if you stick around to the end, there's actually just a few reversal candles on this chart. This is the Tesla chart. I can't resist pointing those out to you as well. And then if there's an interest, I can go into greater depth. First, a promotion for Japanese candlestick charts. Japanese candlestick charts are awesome. They are so much better than standard line charts. You can learn so much more about price action and the health of a stock by looking at Japanese candlesticks. So let's jump into it. Two things before we begin. One, not financial advice. This is just for education. Two, I encourage you to check out my Patreon. Link in the description. I show my current portfolio and focus list every week to my Patreon members. And three, did I say two things? I guess there's three. Three, I encourage you to check out my partner, also in the description, Seeking Alpha, the #1 website for fundamental analysis, in my opinion. All right, so in general, white candles are good, red candles are bad, and black candles are kind of in between. There is some gray area there. Let's say good, but less good than the white. White is good, black, less good, but still good, red is bad. Now, there are always exceptions. There are some nuances, but that's the general rule. So let's look at, here's the Tesla 1-year chart. Now, how the heck do we read these things? Let's find an interesting candle. Well, first, looking at it, as you can see, it's going down on red days and going up on white days and also going up on black days. Now, let's zoom in on 3 different candles and I'll show you how to read them. Okay, let's zoom in on this little rascal here. White means it closed above the previous day, and it also closed above the open. So the bottom of the candle is the opening price. The top of the candle is the closing price on a white candle. This little wick on the top means it probed up to that price and then came down and settled right to there. This lower wick means it fell during the course of the day, actually undercut the previous day, but then rallied and finished way up there. Now, this is a hammer candle, and if you want to get technical, hammer candles are good at the bottom of a downtrend, but on an uptrend, they actually can indicate stalling action, but let's not go into that. That's not the purpose of this video. Okay, now let's look at a red candle. All right, let's look at this little rascal right here. So a red candle means that it closed beneath the close of the previous day. So this red candle, it opened right here and it closed right here. Over the course of the day, it temporarily rose up to here, and it also fell all the way down to here, and it settled right to there. Now let's look at a black candle. Well, first of all, let's just say that a red candle is generally bad because obviously we don't want the price to be closing below the price of the previous day. And a white candle is generally good because we want to see the price closing above the previous day before. Right? Was I just redundant there? I think I was. All right, now a black candle. Now, black candles, you really need to look at the context, meaning look at the price action for a handful of days before that candle to make some sort of judgment. But in general, like I said, better than red candles, not as good as white candles. Let's look at this one right here. So what this means is this the price action on this day opened right here, and it probed up to this price, fell to this price, and closed right here. So the previous day's close was here on this red candle. This day's close was right here. So it closed above the previous day, but it closed below the open. And so obviously it's bullish that it closed at a higher price, but it's bearish that it faded into the close. You want the price action to end strong at the end of the day. So when the price runs up and then closes below the open, that's stalling action. That's like a drying up of demand, and that often can signal a tops. And sure enough, these two, well, three actually black candles are indicating that this uptrend is wearing out. Okay, now if you've got it, that's great. If you're still confused, let me show one more white, one more red, one more black, and then I cannot help but show you guys three bullish reversal candle patterns. So let's look at a white. Okay, I'm just picking one at random right here. So here's the previous day's price action. And then on this day, it opened here. It fell down to here over the course of the day, which makes that little wick. And it ran all the way up to here, came back down, and closed right there. Made a little candle formation, right? Although I guess we'd have to remove that tail to make it a perfect candle. So that's a white one. Let's look at a red. So red days are the opposite. So it opened here, pushed up to here at one point during the day, fell all the way down to here, and closed right here, closing near the bottom of its range. This is a bearish engulfing candle. See how it engulfs this candle? That's a bearish short-term sign that when you see that at when you see one of these print during an uptrend, it's often a sign that the uptrend is done on the short term. And sure enough, it did roll over for a few days. Let's look at one more black one. Okay, black candle opened right here, notched up just a tiny bit, fell all the way down to here, closed above the previous day, but closed quite a bit below where it opened. Okay, I guess there's one other candle, and that is when you don't see much color at all. This is called a doji, a spinning top doji. It indicates indecision. This particular one is called a gravestone doji, which is rather ominous. Often when it prints during the uptrend, it often signals that the trend is tired. I'm not going to go into the details as to why. But yeah, those are dojis. And then let me show you, there's three bullish reversal candles. Okay, now this was way back in January of 2023. Here is, remember when I showed you that bearish engulfing candle? Here's a bullish engulfing candle. It engulfs the previous day. And this is a dragonfly doji that signals indecision and potential change during a trend, in this case a downtrend. Now this would have been even better if it engulfed more than one candle, if it had closed up here. But in any case, when you have a downtrend and then a bullish engulfing day and then it prints to the upside the next day, that's a pretty reliable indication that the trend has changed. Okay, bullish reversal candle number 2. These are called tweezers or railroad tracks. So you've got a big down day and then just the opposite the next day, a big up day. They kind of cancel each other out. And then if it prints, if it opens to the upside the next day, that's reliable, fairly reliable, it's a generally reliable indication that the trend has changed. And sure enough, did it ever. Now we can see these pinchers or railroad tracks on the other end of the trend as well. We talked about that one already. This one is not quite a bullish engulfing day because it did not engulf up right here, but they're pretty similar. They indicate the same thing. A bullish engulfing day, in my opinion, is stronger than railroad tracks / tweezers / pinchers. Let me show you one more. This one has a rather ominous name. It's called an abandoned baby. See how this candlestick was just abandoned here. When you have a downtrend and then it suddenly prints an abandoned baby and then opens to the upside, again, it's a reliable indication that the trend has changed. Some people trade purely based on Japanese candlesticks and they just swing trade really short moves. And you can do that. I incorporate that into the bigger picture. I look at price patterns and on the yearly chart and the weekly chart, and I look at fundamentals too. Okay, I actually went deeper in the weeds than I wanted to. I just wanted to show you how to read these Japanese candlestick charts. But let me know if you're interested in learning more about Japanese candlesticks. It's really fascinating. I've been using them for probably 15 years or so, and it's really improved my trading. There are whole books written on the subject. It's very nuanced, and there's a lot to it. But that's the basics. That's enough for you to be able to read candlestick charts, and I encourage you to make the jump. It takes some getting used to. I remember when I first looked at these candlestick charts, I was like, what the heck? How can anybody read that? But now, when I see a line chart, I'm like, what the heck? I can't understand price action from that. Give me my Japanese candlesticks. Okay, check out my Patreon and Seeking Alpha in the description if you wish. Don't forget to like the video. It's really annoying for me to have to say that, but it really does help. And let me know your comments and questions. Take care, everybody.